What's up, everybody? Today we're diving into a mix of under-the-radar stocks and cryptos, Lobo EV Technologies, Performant Financial, Equillium, Seamless, Audius, Request, and KAVA. We'll break down the fundamentals, recent performance, and analyst sentiment to see if these are buys, holds, or ones to avoid. If you want sharp, no-nonsense financial analysis, make sure to like and subscribe. Let's jump right in. First up, let's talk about Lobo EV Technologies, ticker symbol LOBO, a name that's starting to pop up on more investors' radars as the electric vehicle space continues to evolve. Unlike the big names chasing the passenger car market, Lobo is carving out its own lane. They focus on electric off-highway vehicles, think golf carts, utility vehicles, and workhorses for resorts, farms, and industrial sites. This niche is less crowded and ripe for electrification, as industries look for cleaner, quieter, and lower maintenance options to replace traditional gas-powered fleets. It's a market segment with real potential for disruption. Lobo controls the entire process, design, manufacturing, and sales, which gives them tighter quality control and better supply chain management, a big advantage in today's unpredictable market. The company is scaling up, expanding its distribution network, and investing heavily in R&D. Like most small-cap EVs, it's not profitable yet, but that's typical at this stage as they pour resources into growth. Analysts see long-term potential if Lobo can boost sales and land big contracts with major clients. However, cash burn and increasing competition from both established players and new entrants are real risks to watch. The financials show growing revenue but also rising losses, a classic growth stage story. Investors need to be patient and understand the risks involved. Ultimately, Lobo's success depends on building brand trust and proving their vehicles are cost-effective, reliable, and truly meet the needs of their target customers. Bottom line, Lobo is a high-risk, high-reward speculative play. It's only for those with a strong stomach, a long-term view, and the willingness to weather volatility. Watch for sales growth and margin improvement in their quarterly reports, as these will be key indicators of whether the company is on the right track. Don't expect stability or dividends. This is a lottery ticket, not a blue chip. It's a bet on future potential, not current performance. If you're interested, keep your position small and diversified. Never put all your eggs in one basket, especially in a sector this unpredictable. The EV revolution is real, but not every player will survive. Choose wisely and let's move on to the next contender. Next up, let's talk about Performant Financial, ticker symbol PHLT, a company that often flies under the radar but has been quietly making some interesting moves. Performant specializes in helping clients recover improper payments and outstanding debts with a primary focus on the healthcare sector and student loans. Their expertise in navigating complex billing systems makes them a valuable partner for organizations looking to recoup lost funds. Their recent pivot to healthcare is especially important. This market is not only massive but also tends to be more stable and less cyclical than student loans, offering a more predictable revenue stream. Performant leverages advanced data analytics and technology to identify and recover funds efficiently. They often work on a contingency basis, meaning they only get paid when they deliver results, so their incentives are closely aligned with their clients' success. Recent earnings reports show that healthcare revenue is growing steadily, which validates their strategic shift and suggests they're on the right track. However, there are risks to consider. The biggest is their heavy reliance on a handful of large government contracts, which can make their revenue stream vulnerable. If they were to lose even one major contract, it could have a significant negative impact on their financials and growth prospects. Regulatory complexity is another ongoing challenge. Performant must stay on top of ever-changing rules and compliance requirements to avoid costly fines and protect their reputation in the industry. On the plus side, their balance sheet is healthy for a company of this size, and the recurring revenue from long-term contracts provides a solid financial foundation. Analysts also point out that the high barriers to entry in government contracting work in Performant's favor, making it tough for new competitors to break in. If Performant can continue to win new contracts and diversify its client base beyond just government agencies, there's real potential for upside and long-term growth. This is a classic value play with meaningful growth potential. It's not a get-rich-quick stock, but it could reward patient investors who believe in the story. If you're optimistic about their healthcare pivot and comfortable with the contract risk, PHLT deserves a spot on your radar. As always, do your homework, keep an eye on their progress, and watch for any changes in their contract pipeline. Consider adding Performant to your watch list if you want exposure to the healthcare recovery space. Now let's move on to the next opportunity. Let's talk about Equillium, ticker EQ, a clinical stage biotech company that's trying to make waves in a notoriously tough industry. Their main focus is itolizumab, a promising antibody treatment aimed at tackling autoimmune and inflammatory diseases, areas where new therapies are desperately needed. The company's entire future depends on the outcome of their clinical trials. If the data is strong, Equillium could have a blockbuster drug on its hands. But if the trials disappoint, the stock could collapse overnight. Their lead program has received FDA Fast Track status, which is a big deal. It means the review process could be accelerated if the results are positive, potentially bringing the drug to patients faster. But remember, biotech stocks are notoriously volatile. Most experimental drugs never make it to market, so the risk here is extremely high. Another challenge is cash burn. Clinical trials are expensive, and Equillium will likely need to raise more money soon, which could dilute existing shareholders and put pressure on the stock. The entire biotech sector is still recovering from a brutal bear market. Valuations are lower than they've been in years, but that also means funding is harder to come by, making it tough for smaller players to survive. If Equillium can deliver positive clinical data, it could attract the attention of big pharma companies looking for new pipeline assets, or even become an acquisition target, which could send the stock soaring. But make no mistake, this is a pure speculative bet on science, not a business with steady revenue or profits. There's no safety net if things go wrong. Only invest what you can truly afford to lose. This kind of play is not for the faint of heart or those seeking stability. For most investors, a diversified biotech ETF is a much safer way to get exposure to the sector, rather than betting on a single high-risk name. If you do decide to buy EQ, keep your position tiny. Think of it as a lottery ticket, not a core holding. The potential upside is massive, but the journey is filled with risk and uncertainty at every turn. So keep a close eye on clinical trial updates. These will make or break the story. Now let's move on to crypto. Let's talk Seamless Protocol and its SEAM token, a DeFi lending platform on Coinbase's Base network. Seamless lets users lend and borrow crypto without banks, using smart contracts and integrated liquidity markets for tailored risk and better yields. Building on Base means faster, cheaper transactions and potential access to Coinbase's user base. SEAM is a governance token. Holders vote on protocol changes and treasury use. Key metrics: total value locked, TVL, borrowing volume, and active users. Growth here signals adoption. Risks: smart contract bugs, crypto market volatility, and regulatory uncertainty. Competition is fierce. Aave and Compound are established giants. Seamless must prove its innovations attract real users and liquidity. If Base grows and Seamless becomes a top app, SEAM could soar, but it's early and risky. Only consider SEAM for a small speculative crypto allocation. Monitor TVL and user growth for signs of traction. This is a bet on both DeFi and the Base ecosystem. High risk, high potential reward. Don't go all in, diversify. Next up, music and crypto. Audius and its audio token aim to disrupt music streaming by connecting artists directly with fans, cutting out middlemen. Audio powers staking, governance, and special features for artists. Audius has attracted many indie artists and built a solid user base, but lacks major label stars. The platform is easy to use, but token price is volatile and tied to broader crypto trends. Monetization is a challenge. Most features are free and the team is exploring NFTs and exclusive content for revenue. Breaking into the mainstream is tough. Big artists are locked into label contracts. The investment case: if Audius cracks mainstream adoption, audio could skyrocket. But the risks are huge: entrenched competition and uncertain monetization. This is a venture-style bet on Web3 disrupting music. Only invest if you believe in the vision and can handle losing your stake. Watch for major artist partnerships and monetization progress. The upside is massive, but so is the risk. Audio is for true believers in the Web3 creator economy. Don't expect quick wins. Let's move to the next project. Request and its REQ token aim to modernize invoicing and payments using blockchain. Anyone can create and pay invoices in crypto, with fees paid in REQ, driving real token demand. A portion of fees is burned, making REQ deflationary as usage grows. Request integrates with accounting software and is used by major crypto projects for payroll and expenses. The big opportunity, as more businesses adopt crypto, demand for crypto-native invoicing will rise. Main challenge: convincing traditional businesses to switch from banks and PayPal to crypto invoicing. Competition from both fintech and crypto projects is a risk. Request needs to build strong network effects and user loyalty. The investment thesis is clear bet on the professionalization of crypto payments. REQ is less speculative than most crypto, focused on solving a real business problem. It's a slow-burn infrastructure play for long-term portfolios. Not a get-rich-quick token, but solid fundamentals. Watch adoption and integration progress. Let's wrap up with our last asset. KAVA and its KAVA token, an ambitious Layer 1 blockchain combining Cosmos and Ethereum compatibility. KAVA's co-chain architecture lets developers and assets move between both ecosystems, aiming to be a DeFi hub. The KAVA token is used for staking, governance, and transaction fees, incentivizing holders to secure the network. If KAVA attracts enough developers and users, demand for KAVA could surge. Risks: fierce competition from other Layer 1s, technical complexity, and stablecoin, USDX stability. KAVA must prove its unique approach delivers a better experience and real cross-chain liquidity. The staking rewards are attractive, but the field is crowded. This is a high-risk, high-reward bet on cross-chain DeFi, only for those bullish on Cosmos and KAVA's vision. Watch developer activity and ecosystem growth. If KAVA succeeds, the upside is big, but so are the risks. Diversify and don't overexpose. Let's close with a quick recap. Final thoughts next. To sum up, Lobo and Equillium are high-risk, high-reward stock plays. Performant is a value bet on a healthcare pivot. In crypto, Seamless and Audius are venture-style moonshots, Request is a solid infrastructure play, and KAVA is a speculative Layer 1 bet. None are simple buys or sells. Your risk tolerance and research matter most. This isn't financial advice. Always do your own due diligence. Never invest more than you can afford to lose. Thanks for watching. Let me know your thoughts in the comments. Don't forget to like and subscribe for more deep dives. See you in the next video.